Okay, go ahead.
Good day, everybody. Welcome to FXStreet's coverage of the GDP. I'm joined by Val and Mauricio. The
Hi.
three, just like three drives to a top. What a complete staff. We have three of us here today. Thank you for choosing FXStreet for your GDP coverage. Hi, Val. How are you? Hi, Mauricio. How are you doing today, buddy? Wingman.
Hello there, how are you? Hi, Valeria. So the GDP is going to be like a 2.6% according to economists. It's pretty better than the last one. What do you think, Valeria?
Hi, guys. This is the advanced reading, so it's usually the most relevant because it has the higher impact because it's the first reading for the second quarter. And compared to the minus zero point 0.2 we had in the first quarter, this should be considered a really strong number and should signal the Fed it's in the path and getting ready to raise hikes. So a rate hike, sorry. So that will mean that we will probably have further dollar strength afterwards.
Yeah, there's a debate out on that Fed statement. How did you construe it, Val? Except for the word solid, when it came to economic growth, it was almost an identical statement. And
Yeah,
people took it both ways, that, that
yeah,
perhaps they're not going to tighten until they looked at that word solid job growth.
yeah. But they said they need some more improvement in the employment sector and not further improvement, as they said before. So for me, is that they are getting almost there, It's that they say, we're almost there, guys. That's what I take from the statement. Although we have been warned earlier this year that there's no way they're going to anticipate us when or how they're going to move. So I do believe that from now on, it could be in any meeting. So
That's
we
right.
have to be ready. Okay, just that. Be warned.
If they really want to surprise, it's happened before, I believe, in my history, where the Fed has gone between meetings.
Yeah. Well, also something I forgot is that we have two payrolls ahead of the next
Yeah,
meeting. One next
right.
week and the other at the beginning of September before the meeting. So I will be watching those with I don't know, two eyeglasses, because if they are positives, and that will signal a high probability of a September rate hike. I do believe that the main concern remain wage, right? The salaries, the amount of
Yeah.
salaries that are depressed.
Also because of what's happening in commodities, that's making it more difficult for the Fed to get to their inflation target.
Yeah, I do believe that falling crude prices are waiting on the Fed decision, but somehow I don't see oil recovering ground these days. I believe that will
So,
remain under pressure. So
so,
that's the negative side of the Fed these days.
so if we get a hot number like 300,000 next Friday, that should seal the deal.
Yeah, I do believe that we need a strong number in both payrolls, but it will probably be that.
I am considering for that number because the latest initial jobless claim has been the lowest in 4 decades.
Yeah. Well, speaking of which, with the release today of the GDP, we have another bunch of data. We have a new report from the US, which is the goods trades balance. It's not the international full trade balance, but the good one, which will be released for the first time today. So we cannot asset the impact of that report in the market, pretty much considering it's coming out with GDP reading also. We have initial jobless claims, and we have personal consumption expenditures, which is the favorite measure of inflation for the Fed. So if we see some inflation uptick there, it will be again signaling a sooner rate hikes, sorry guys, and that will keep the greenback in the bullish path, except for against the pound, right? Against the pound is refusing to give up. The pound.
Yeah, the pound, if you pull up the daily, I've been talking about the potential of even a move if the dollar comes off on this above that high. And one, you have two drives and the pattern looks incomplete. There's a lot of resistance. I'd be interested in your numbers. resistance there, and then there might be another level.
This
But to me,
area,
yeah, to me it looks like there's the potential for it to drive up to 160, 161.
yeah,
But if we take out 154, 155, then I think that we're going to have a pretty bearish August for
for pound.
the
For
Yes.
pound.
pound.
So far with this chart, around 56.70, we strong selling interest. The pair has been below that level for all of this July, right? And has been
Yeah.
unable to advance, to be honest. So there's little room for an advance, at least, unless we establish above that level, in which case I do see a clean 100 pips rally, you know, up to 57.70. If you take a look at bigger time frames, back in the past, you will find out that around 57.70, the pair has stalled so many times. It's a huge long-term resistance level. So that's my first target. Let's say if we actually claim this one, right? And to downside 55 doesn't seem enough for me to signal a downward continuation in the mid-term or in the coming sessions. But if we lost 54.40 or so, then yeah, that those lows in this region seems more bearish for me, the pound.
What's your look on U.S. dollar yen? It's been on a tear here today
Yeah.
and yesterday. Doesn't look like there's much in front of the yen trying for new highs here, does it?
It has this 24.45 level, pretty similar to the pound. If you take a look, we have been below it since early June, right? Every approach at that level has failed, right? So if we have a strong number today, then it could be possible that we finally break above it, and in that case, I'm expecting a pair to retrace those highs in 25.80. You know,
Okay.
if you look at the shorter term, you will see that there was a small failure at this rate. It looks bullish short term, to be honest. It looks like it's going to, but I would love to see it confirm it.
Guys, there is a no, sorry. There is a question from the chat. Neville from the chat. He's asking, how do we predict the news, and what is the opinion in the? What is in your opinion, Val and Dale? What number will be like a bearish for the greenback, or if above expectation, what will happen, or below expectation, what will happen?
If the number is in line with the expectations or even better above it, should be dollar positive, you know, mostly because it's showing that the economy recovered for that terrible first quarter. But if the reading is, I don't know, below 2, or it will be pretty disappointed because it will mean that growth is not enough in the US. So it will be probably signaling a further retracement delay, sorry, in the US rate hike, you know. But I would like to see a number of, around 2.4, 2.5 or above. That despite below expectations and despite whatever the initial reaction of the market will be, a 2.4, 2.5 or above should be considered dollar positive for me.
I see. Okay.
I just see a caveat being, since we've been correcting down in the euro into the number, yen up into the number, that there's potential that the highs we made last week in the dollar index, and I think that would coincide with like 108.20 in the euro. To me, it looks like there still is potential, still a lot of euro bearishness, still a lot of parity bears looking for it sooner rather than later. That if we hold this 109.5 level and head back up, potential stop hunts are above that 112 level.
Yeah.
And I think it's possible if we dig in our heels here above 109. Under 108.20, to me, that's a breakdown of the range, about what is at least a 400 pip range. So that would be full-blown retest 104, 105 euro. So
Yeah.
couple of decent brackets right here on the euro for the next move, and almost looks like perhaps we're putting in a right shoulder of a little head and shoulders formation, Bill, with
Yeah.
a slightly declining neckline. So,
Yeah.
so if we put in higher lows and then we start attacking this level again above 110, the 112. I think there's at least one or two buy stops above that 112 level that the algos and black boxes in the summer would like to shake out. So I don't think there's many sell stops under this recent low. Just don't hear a lot of chatter about a bullish euro. I mean, the only guy I've talked to in the last month would be Mark from Chicago, Mauricio, who teaches in that course. When I interviewed him, he was bullish euro and bearish the market. So, and you know, he's been around the block a few times. Guy knows what he's talking about. So, but everyone else is, you know, bearish. So, I don't know. The summer's a great time to, you know, reset and cleanse. Too many, you know, over positioned things like, you know, gold. They have net shorts for the first time here, probably setting up some type of corrective rally. So I don't know. I'm not getting that bullish dollar up here. But what do I know? I'm just a lion in the middle of a jungle. At least I'm not the lion that got baited out by some crazy dentist here in Minnesota that was on a preserve.
Yeah, you're not passive.
Yeah, I mean, you know, I'm a kindred spirit with a lion, so it's like taking out one of my family. The guy can't even show up at his dental office anymore. He's disappeared. So, wow. I really never understood hunting.
Me neither.
Me neither.
So, trophy of what was a beautiful live being just being stuffed on a wall.
Yeah.
I'd have nightmares.
Yeah.
You know, the life is really beautiful. Yeah, you know.
You know how I feel about lions, Mauricio. I had to bring it up.
I think I got the Aussie.
The Aussie.
Yeah, it's testing the approaching 60 to 50, 60 area. The lows of the year, he said earlier this week. So it's
pretty glaring divergence if it does it. Look, I can't help it. I keep seeing 3 everywhere. So, I mean, this might be 3 at new lows. And look at pretty glaring divergence at new lows.
Yeah.
It's at 4 hour or yeah. Yeah, it's not going to confirm. I think gold, you know, gold could maybe break to one more shade low, but I think both Aussie and gold are due for, I don't know, a 2-week rally. I mean, the whole world hates them both. So, but I would rule out one more push. But, you know, when you start diverging like that, maybe it doesn't warrant a reversal of trend. But it should at least be a warning to those who are bearish.
Yeah, I was about to say that.
New lows are not confirming, so, you know, that's kind of a reason to take something off the table. That was from the squirrel.
What were you about to say, Mauricio?
Oh, I'm sorry, there is a Nabil from the chat. He's got another question. It's more educational question. He's asking about how do you trade news if you completely ignore technical analysis where is fundamentals coming out. For me, it's a mix. You know, you can not go in like a long if you have a resistance just up from you, or going in short if you have a support or a level. Yeah, but what do you think? What's your opinion, Val and Dale?
I don't like trading purely fundamentally, as you have just said. I watch for levels, breakout levels to take, and if the news is in line with, I don't know, maybe right now in the euro we have a strong dollar, so if the news is dollar positive and the pair breaks the support, then I would sell, but I'm not only going to trade the news because you cannot actually predict how the market will
That's
react.
right.
You
That's a
can,
good point.
the
I don't
market
trade.
can
I'm,
react.
I'm with Val. I don't trade news. To me, that's roulette. You're betting on how a market will react to a news event. To me, that's a black or red bet. And I talk about reacting to the reactions. And there's an old Wall Street cliche, and I think it had a lot to do with news. Of course, news was not instantaneous back then, but they say people who buy headlines today sell newspapers tomorrow. So
Yeah.
be careful going with news events.
Yeah, I was about to ask about that sentence. It's really clarifying that
Yeah.
sentence. People who buy headlines today sells newspaper tomorrow. We got another question from the chat. There is, what about the US dollar Swiss franc? What's your take on that?
The Swiss franc, it's being intervened by the central bank, meaning they want a weaker currency in there. In these cases, when we have dollar strength in the market, at least temporal, they don't act too much, right? So, uh, but still, I believe that the pair it's limited to the downside, and dips are more like buying opportunities than as signals of a reversal. The Swiss the Swiss National Bank, sorry, is trying to prevent strengthening here. Although uh, intervention is not the best tool ever because we have seen that it has failed several times. The risk is too high in there to go with the Swiss. So if the news is I don't know, dollar negative, I'd rather buy the pound, which looks much more stronger against the greenback than the possibility of the Swissy, or even go with the dollar Japanese yen down because of the strong resistance level we are approaching right now. So that's my personal take.
Honestly, I don't even look at the Swiss anymore since the peg incident.
Yeah, January has killed the Swiss for traders.
I don't even look at it. And it used to be a big part of my puzzle for, getting tells on the euro by how US dollar Swiss was acting, but I can't, it feels too artificial to me now.
Yeah, that's part of the intervention question. Matter.
Yeah, what isn't artificial? I'm asking myself right now.
My wrinkles. Those are not artificial. My white.
Oh, that's beautiful. Thanks, Phil.
You asked.
Yeah, well, gold. Gold's outlasted many civilizations and many currencies in its history. So. A lot of gold bears now. Now, we were talking about it flushing one more time, 1080, and I don't know, did we take out 1080? But I think between 1080 and 1050, there's some kind of bounce, maybe back to the breakdown before it fails, maybe back to 1140 or so.
I have this line draw around 1110.
Yeah.
Right. Because I believe that it's like a short term, right? Line in the sun. Not a definition of trend, but a short term line in the sun. And I do really want metal recovering above this level to see another leg higher, as long as we approach to the level of faith and favor. But take a look at the daily. We have been posting 3 doges in a row this week. Today the market woke up and it's on sell mode. If we lost this 71, I do believe that we will trigger enough stops to go down to 50, as we said.
All right, that's show me the 1 hour chart on the gold.
Oh,
and I think 1050 is possible. Okay, is this a 1 hour?
Yeah.
Okay, maybe a little longer term. like more time. Okay.
That's the 4.
Yeah. Okay. So I thought I was seeing something on mine. Let me pull mine up for a second.
Well, we have some question here. There is what about the euro dollar, bullish or bearish, and then what about the gold,
They
and
will
also what about the New Zealand dollar? You can.
both euro and gold seem to go in the same direction today, so we'll probably maintain that correlation. And of course, the direction will be determined after the news. And remember, I told you we have a bunch of news, not just one. So be aware of that.
Yeah, Marco from the chat is asking specifically what is the best pair to trade after the news. For example, why the euro dollar is better than to trade than the New Zealand dollar? Why the JPY USD is better than the euro Japanese yen? In your
Uh,
opinion?
well, for me, it's a question of the stronger against the weaker, right? Right now, we have a strong dollar and a really weak, for example, Japanese yen or Aussie. So if the news is favoring this current dollar strength, I will rather go with those two pairs. But if the news is negative for the greenback, let's say, and considering that the pound is holding really strong against the greenback at this point, then if the news is negative for the greenback, I would rather go with pound dollar. It's a question of measuring the strength or the weakness of each currency from its own, right? And taking the best decision you can with that information. For me.
So that's trade selection, and that's a pearl about relative strength and relative weakness, being long the strength, short the weakness. So write that down, everybody. And you know what also could be the best pair for you to trade every day is the pair you know the best.
Yeah.
Okay, so I knew guys that never left one trading ring. In Chicago, we called it a pit, their whole career, and they knew that market like the back of their hand. And so, you know, specializing in a currency is not a bad idea, or maybe 3, and getting to know all the important technical levels so that when we have news events like this and you're flat, you'll say, oh, look, it's rallied up to my, 100-day moving average and it's coming off. So you're prepared for after the event, not trying to predict the event, but nothing wrong with really knowing what's a saying, Val? Jack of all trades, master of none. So, master something. I know I get confused when I look at too many things.
Yeah. That happens sometimes.
Keep it simple.
That's right. Keep
Market
your screen. Sorry?
Market is buying the greenback, anticipating a good number, because we are seeing take a look at the dollar to 10 new highs in there, and the rest coming. Hi, can you hear me?
Yes.
Yeah.
Oh, okay, sorry, I thought we lost the connection.
No. Now, USD CAD, Val, I think still could have one more trip down to 128. So
Yeah?
we had a 2-day pop in crude. Yeah.
Yeah.
Still possible, one more trip down there.
Yeah, we have 130, so.
Because, just having a couple of updates in the crude made it, even the bears are allowing a rally back to 50, 51, where they want to get short in the crude, and we're not there yet. So if there's a little bit more upside in the crude, there could be a little more downside in CAD.
Yeah, I was watching that latest recovery yesterday in price after stockpiles news has reached the 38.2% retracement of the latest bearish run, right? We are studying around that level. So beware of that, because if we don't manage to break above it, The upside seems pretty limited for me. I would be looking to break below 48, 20, 30 to confirm the bears are back in control in here. But if we take that 38.2%, then it can rally further and favor your dollar CAD towards 120. Stocks are turning lower, also anticipating a good number.
Remember, we have a blue moon this Friday.
Mm.
Oh yeah, I was
You know what
reading.
a blue moon? You know what a blue moon is?
No, actually no.
Okay,
I
it's
I saw
you
it,
know
did not pay much attention.
it's a rare event. It's two full moons within the same month.
Ah, okay,
Doesn't happen. Yeah, that's a blue moon. Very
because
romantic too, right, Mauricio?
Yeah, yeah, I'm
Don't you
falling
like
in
going
love.
for a
Yeah,
stroll with your girl under the light of the moon?
yeah.
Beautiful.
we're expecting storms in here for the upcoming 5 days. There's
Please,
not
wow.
a chance I'm going to see the blue moon.
Uh, yeah, it's winter down there, Carolina. I talked
Yeah.
to her yesterday. I said, I hope you're having a nice summer, Carolina. She said, well, it is winter down here.
She is under below, down under. Well, we are 3 minutes to go. Just
Yeah,
to
get the drum
remember,
roll going.
yeah, just to remember, users, members, that we will have, or we are having 30 seconds delay. So you will see the numbers, and then we will starting to comment the reaction. But be aware that we are 30 seconds delay. There is two questions here. What should we expect from GDP, positive or not? Yeah, it's expected to be 2.6 a growth, to be widely better from the last previous, that it was a decline. We don't expect a decline in the US GDP. We expect something like a 2.6, and it will be strong for the dollar. It will be positive for the dollar. Well, there is Nabil asking if we will report the news as soon as it is out, but we have a 30 seconds delay. You will check the chart, and we will say, of course, we will say the data at the time we see it. But of course, we have a 30 seconds delay.
Okay, everyone, I put my Nostradamus glasses on. I
Okay.
predict a strong number. The dollar will rally initially, and then a reversal by day end.
I
Or
don't
into
I don't
okay,
see glasses.
you
Uh,
don't? Okay. Well, I have them on. I have
uh,
them on. Here, I'll show you. I got these from a member in the room. I call them my Nostradamus glasses.
The Nostra Pinker, I think.
Yeah.
Okay.
Oh, here.
okay, less than 1 minute to go. I really, really hope we have some action, some definitions in here.
Okay. Not letting me show it.
Tick tock, tick tock, tick tock, tick
Uh,
tock, tick tock.
we just have got German. Okay. Oh, okay. Yeah. The dollar is getting
Look
oh,
at that.
smashed.
Maybe it's not so
Initial
strong.
jobless claims
Oh,
come
that's good.
lower,
Better than expected.
better than expected. Yep.
Okay, there goes the euro again. New lows euro. New highs Canada. Should be making a new low here in Aussie.
The volatility is about to
Well, the reading is 2.3, lower than expected.
but
But
it was,
go ahead, Valeria. Sorry.
yeah, what I was saying earlier that anyway, it's a really strong number compared to the minus 0.2 we had in the first quarter. So that's what it's helping the greenback advance.
So breaking news: the U.S. grow 2.2 in what? 2. Sorry, 2.3. 2.3 in the second quarter. And the reactions, let me check. Yeah, strong dollar. Let's see what's going on.
Personal consumption is better than expected.
So the pound's holding at a red moving average, Phil, while the euro made new lows. So again, demonstration of relative strength.
In the pound, yeah.
And the caveat being euro at new lows, look at your momentum. This is the second divergence at
In
new
which
lows.
pair, sorry?
The euro USD, this is your second divergence on your momentum indicator.
Yeah.
Oh, yeah, there. And at the bottom. Looks like the low in that indicator was a couple weeks ago, and then last week's low was a higher reading, and so far this decline is a higher reading than that. So again, it may say, may not say buy the euro, but it says if you're short that these lows are not being confirmed, and that's a warning sign for at least booking profits down here if you were fortunate to predict the news and you came in short euro. And you know, you could always take half off and trail your stops and take all the pressure off yourself.
First quarter GDP was revised up from minus 0.2 to positive 0.6%, and personal consumption climbs to 2.9%. Pretty much solid readings, maybe no upbeating ones, but solid readings for the US. Something like new gold is down.
Canada's got a little tail. Starting to get a little one in euro here. And the Aussie has a nice little tail too. Aussie's not that much lower from the last candle. Did that clean out the stops under the lows, Dale? That break in Aussie here? Were these new lows? 72.53 or so. Anyone around?
Yeah, I'm listening.
Oh, okay. That's what are these new lows in the Aussie? Did it take out? Oh, on the daily. Fade the news. Not quite, huh?
Not much.
Oh yeah, I think they made new lows by a pip.
A couple of pips, yes.
Yeah, all right. So so the bottom pickers are gone. Watch this rally.
There is a question from Nick that is he's asking if the pair reverse after news, then should he go for short euro dollar? If the after the reaction of the reaction, if the pair come.
I think we're looking at what could be a significant low for the next wave up.
Okay.
So, my best guess, and I'm saying trade what you see, not what anyone else sees, including me. I think it's a decent shot to be long euro with stops under this range. Same with the pound, and same with Canada, short with stops over the high of the range. Okay, so you're already getting the reaction to the reaction. The initial reaction was dollar positive. And right now, there are some people at least covering short dollar positions. And my best guess is that, like I said earlier, that There's some more downside left in the dollar before the next bull run. And I reserve the right to change my mind if 108.20 is taken out in the euro, then you got to be long the dollar.
Yeah, if any of these pairs takes those recent lows, I mean 922 in here, 92.15 here, and then we will be probably seeing another leg higher in the
When it comes to three drives to a bottom, I like to hear the ice crack, so I'll anticipate it. But you never know if you have a third drive until you get to a bottom, until you get a green candle after the divergence. So if this candle stays red, you still need a green candle to kind of confirm that this divergence is not going to get blown out by it just crashing. So I try and anticipate the candles. Sometimes it works, sometimes it doesn't. But the conservative thing to do is you don't have a divergence for a low until you get a positive candle after that divergence. Those are the rules. But people say I'm a gambler. Life's a gamble, guys.
Yeah, life is a bet.
It is. Or as Mauricio says, your life is the summation of your choices. Did I quote you correctly?
I don't remember that.
No, it was during one of our famous Skype conversations. It's very true.
What
Yeah,
say?
we're all the products of our own choices.
Oh yeah, that's
That
right.
one.
That's right.
We are in there.
I didn't make all good choices. How about you? Are you 100% on your choices? Anyone in here?
Me, yeah.
I am like
You
a
are.
10%. I am like a 10% sure on my choices.
Okay.
10%.
Maurice? Val likes her choices, especially her rings. They're real, not artificial.
Yeah.
You know what's real? Enjoying hanging out with you guys and talking about the markets on days like this. And the people that we meet.
I enjoy that.
Me too, sorry.
The interaction with people during market hours, and it's fun.
Yeah, it's really fun.
We got a core PCE. They're flashing up 1.8. That's good for the Fed, isn't it? That's what they want.
Yeah.
We got the PCE was up 1.8.
Yeah. That's what the Fed likes and what the Fed watch when it comes to measure inflation.
All right, we're getting a reversal candle in Aussie. Congratulations to anyone that took a shot at that divergence. And we're on the verge of that happening in euro. And look at how the pound held Val's red moving average to the pip.
The pound
Canada well off the high. So this was a classic buy the rumor, sell the fact. Everyone looking for a strong GDP number. They came in long the dollar. They got what they wanted, and now they're fading it. Whoever they are. That's so now, like for example, in Aussie, you have a divergence, but also another thing when it comes to candle trading and something else, I don't even wait for it to turn green, but classically, you have to wait for a candle to close to know if it's going to be a green or red candle. You don't know until the candle closes. So there's another rule that I break all the time. I'm just being honest, I try and get the edge, and at times it costs me. It's always better to wait for confirmation.
That's right. And the same situation from Aussie is the New Zealand dollar is also back to previous levels. In your opinion, what is the strongest currency and the weakest currency right now, Daylan and Val?
For
Well,
me,
I
the
guess you
strong,
got. I guess you got against the dollar.
yeah.
Against
Yeah,
the dollar.
yeah, well,
Go ahead, Val.
For me, against the greenback, the strongest is pound,
Yeah.
pound.
and the weakest are commodity currencies
Right.
because we have a 30 pips pounds, but we are talking about a fresh 5 6 year low in New York. So actually, really not much relevant 30 pips pounds, considering that the pair has lost 3,000. But for me, it's that. And of
Great
course,
day.
I
Great
still
day
see the
for
dollar
people.
strong.
There is David asking. He likes the broadcast, and he's asking how does he get that on regular basis. I am typing about the live analysis room, but Dale, maybe you can describe what the LAR is, just giving some approach to David and how what we do in the live analysis room.
Okay. Laura is multiplying this. Like right now, Val is sharing her charts. So in Laura, I'm sharing mine. Unlike this format, people give me links to screenshots to visually display their ideas and what they're thinking in the market. So it's really a community effort. It's not about me or you. It's about everyone in there, and it's a pretty good atmosphere. We say that we root for everybody. There's no envy and no one rooting for other people's failure to make their trading look better. So it's people have made friends in there, so relationships have developed. So really, I call it a mastermind because it's a collection of traders' thoughts, and actually, I've never been surrounded by better technicians and that come and show their work. And I put out a tweet. It shows a guy sitting alone on a cliff, and I say, don't isolate, don't trade alone, collaborate.
Yeah.
So it's a great place for intelligence gathering,
Yeah.
in my objective viewpoint.
Well, we got another question from Eragonecho. Eragonecho from the chat. He's asking, well, he's saying that the U.S. is building an appetizer for a rate hike. He's asking if he should go long now on the what
Long what?
I meant long dollar. I think it's long dollar. He's asking about long dollar
I say
now.
no.
No.
I,
Okay.
I, I say, if Al, if you could pull up a dollar chart.
Dollar index, I don't have it.
Yeah. Oh, you don't have it? Okay.
The
Well, how about a weekly on the euro then?
I'm
Okay.
looking for the dollar. The dollar
Right.
chart. Give me a second.
Yeah,
So if we start taking out today's highs, I think that we're going to clean out stops over 112 and maybe 114. There are counts to 117. You have that first bounce, ABC, and then we've been moving sideways. As bearish as everyone is, we're posting higher lows, and if it starts doing something to the upside, I think that the more vulnerable class of traders right now are euro shorts than euro bulls. I don't think a lot of people got bullish and long at 104 or on the pullback to 107.80. So that's my view. I think the dollar is working lower, and I think the euro could retest that 114 level and maybe eventually take it out. So I think you have time to get bullish a dollar. Actually, I make a case if we ever take out this 93.5 level on the Dixie, that we could trade 85 in the Dixie, and then have a huge move, 90, 85. Then you're talking about 105 level, 110. But I won't get bullish the dollar again until the euro takes out 108.20. Until then, I think the market wants to shake out dollar bulls. I think there are still too many. I
Yeah,
know that's just my opinion. People disagree with me, and the market could prove me wrong, and I know where the market will prove me wrong, and that's under 108.20 in the euro.
Short term, I do believe that in the short term, we depend on the high and the low of these candles. If we take any of that, we will have a clear intraday direction. At this point, I believe that the euro has light in the sun, let's say around 980. So if we take over this level, then we can start recovering. But if we don't, or before to resume its light short term, right, intraday, I mean, 2880 is probably bearish target there. So that's what I've been watching for. I don't like the fact that the pairs have correct some, but are not able to close the green, right? As I said, we need a candle to confirm that we have a short-term bottom in there. The market is reversed.
Okay, so the next 2 weeks, next month, what is instructive is before the number. I talked about people who buy headlines, sell newspapers tomorrow, and the news was dollar positive. So if you went with it, you got short. You were right for 5 minutes, and now you're underwater. Okay, so again, react to the news instead of going with the news. So it was a classic example of, in the dollar, buy the rumor, sell the fact. Like the market was already positioned for this number.
Yeah.
Well, there is another educational question in the chat. Navi is asking, what is the correlation between gold and USD dollar? If you do you
There's
think if there is
there.
a good
How
correlation or not?
it's an inverted correlation
Yeah.
because the gold quotes in greenbacks. I mean, a stronger dollar will mean a weaker gold, and a stronger gold can hardly mean a weaker dollar, but it at least weights a bit. But keep in mind that it's quoted in dollars, so that means that it depends on dollar strength or weakness.
I kind of use Aussie for a proxy to gold. But correlations, let me tell you, I'm always looking at them. And I've seen gold rally during dollar strength, break during dollar weakness, rally with dollar weakness. So forget about trying to correlate gold. Trade gold like it's its own individual animal. Trade the chart. But in my view, I think the Aussie is the closest correlated currency to the gold. Put the two charts together.
By the way,
Learn that from Ed Matz.
Sorry, I didn't understand what you mean.
I learned that correlation from Ed Matz, a guy I interviewed.
Okay.
oh, I see.
See, so that that's a great thing about what we do is we're always learning, aren't we?
Yes,
Hmm.
that's right.
So even get a little reversal candle in the end here. I think you identified this area, Bill.
So, okay. By the way, what is your take on the gold, Dale?
I think that if I'm negative the dollar, I think gold is the market's too short. We talked 1080, it took it out. I think there's a rally coming in gold with a bout of dollar weakness. Maybe back to the breakdown would be a natural thing. And that breakdown was 1140.
1140.
If it's real bad, it shouldn't get there. Maybe it'll stop at your blue line.
100 simple moving average.
Yeah, 1120.
Yeah.
But I mean, when you have a support area that held for well over a year, it's kind of natural for it to come back and test it. Right now, gold with the pop in the dollar, you have a higher low working there right now. So I mean, if you wanted to take a shot at the gold, you buy it here with stops under that 1075 level. Reassess if it takes that low out. Otherwise, maybe you get something like you had from there, a $30 rally. To take you back, I think Val was looking at 1110 resistance.
Yeah.
So Val, how about that 15-minute range rule? Maybe there's been some signals based upon that 15 after the first 15 minutes. Maybe we could look at one. People could play around with that on news.
Take a look at the 15-minute charts.
Yeah.
It's pretty much the same that the first 15 minutes.
Right.
It's pretty much the same what we're seeing in the hourly chart. The high and the low were set in those first minutes. So right now it's a matter of breaking about them.
Yeah, it's like a bracket trade. Above the range is a buy signal, underneath is a sell.
Yeah.
Adam Button says he hopes we get 112 in the euro to sell it. That's what he said.
To sell?
Yeah, to sell at 112. He hopes it gets up there one more time.
Yeah. That's more of a long-term trade.
Yeah. He's got some bearish seasonals in the pound in August. But sometimes they don't take hold till mid-month. You know, it's how the month finishes, not how it starts.
There is a question from Fandy from the chat. Do you all see EuroCAD retest to 144?
I don't believe I ever watched that chart. I sometimes follow the Euro Aussie, but honestly, I don't pay much attention to the process of the Euro. Euro CAD. Here we are. Let's see what we have in here.
Yeah, I guess they'll have seen it from in the LAR. I know that the LAR has watching.
Okay. Yeah,
LAR
you
watch a lot of Paris.
I don't know. I just don't want to get bearish any euro crosses right now. Could be wrong.
It's pressuring lows. We have a lot of lows right there, so maybe we take it. We can go a few pips lower.
Looks like it could end up being the head of the Head and Shoulders with the neckline around 139 or so. The only thing I don't like about the short is look at the RSI reading at the high. See that?
Yeah.
That confirmed the high. So you had a new high being confirmed, no divergence. And I'm not saying it's always true, but markets rarely peak on confirmed highs. Normally it takes a couple of non-confirmations. So that tells me there's potential for another high.
Yeah, Marco is asking that in the short term, will you say to trade against the dollar? Well, we are not saying that, but yeah, that's as far as I understand, Dale, this is the option.
Safe and FX trading are not in the same universe. There's no such thing as a safe trade in FX. There's managed risk and probabilities, but safe does not apply to what we do here. If you want safety, close your account and put your money under your mattress.
Even better than the
Or buy treasury bills or a CD.
Yeah. Well, the thing here is like yeah, short dollar in the short term, but long dollar in the long term. It's like the sentiment.
Yeah.
Okay, so guys, I will ask you both to do a small and quick approach on summary of what happened today in this US GDP release and what will happen in the forex market in the next hours in the short term and the next days in the middle term.
Anything else?
Yeah, no.
I was kidding. I was kidding. Anyway, what
Well, if
happened?
you want, you can say whatever you want. Yeah.
Yeah, I know, I know. For me, what we had is we had pretty solid data coming from the US, improving unemployment claims, improving GDP, maybe not as much as expected, but much better than the previous one. The previous was reset higher. So generally speaking, I do believe that data continues to point for a rate hike in the US. And that's the main market mover this year, right? While many economies are still doing easing across the world, the US is in the path of tightening rates the first, okay? And that's what's leading the market. So positive data is understood as a sooner rate hike, negative data is understood as a later rate hike. This data means, for me, a sooner rate hike. So that means the dollar will continue strong against most of its rivals. We may see a short-term reaction right now that goes against the greenback, but we are talking a handful of pips against the long-term dominant bullish trend in the dollar. So it's pretty relevant for me, the fact that the market may reverse some right now. Okay. And in fact, I do believe that in the short term, I would wait around 30 minutes when we have Wall Street opening to confirm whatever next market move is. But if greenback manages to break below 920, the lows against the euro, there's a good chance the pair will continue sliding towards that 820 that will prove they wrong. Okay, but of course that does not apply, sorry, to the pound, because as many of you may know, several MPC members have been saying that a rate hike in the UK is coming soon, right? That means this is the second economy who will be into the tightening path probably by the first half of 2016, and that is what is keeping the pound strong enough these days, right? Not enough to run, but enough to fight against dollar strength. So whatever comes that results for me dollar negative will mean a buy in here, and whatever thing results in a dollar positive for me will come on a sell in euro or in Aussie or buy in dollar Japanese yen. That's what I'm looking for. Okay.
Okay, thank you, Val. And what do you take, Dale?
It was a classic example of buy the rumor, sell the fact. People will buy headlines today, sell the newspapers tomorrow. I talked about divergences before we had the turn in Aussie and Euro, and completely concur with the relative strength diagnosis by Val on the pound. So I'm thinking that there's some dollar weakness ahead, and that these lows can set the stage at least for bear market rallies in Aussie and the Euro. I think if we bottom here, that there's still a stop hunt above. So I'm dollar negative, and I think that for people that are contrarians, this was a classic day to fade the news. And you have leads and you have your stops in. If you bought the Aussie wrong, if it takes out the low, same with Euro, same with CAD. I talked about the tail there, and crude could go to 50, 51. That could take CAD back down to 28, and I'm looking at Val's crude chart, and that's a nice looking candle. So
Yeah.
there's maybe another $1 to $2 left in crude on the upside. and that's still within the confines of a massive bear market. So, markets don't go one way, and sometimes they get extreme. And Canada was not making new highs, with crude making new lows for about 3-4 days last week, and here we are, I think 128, another test down there. So I guess you could say that for the next 24 hours, I'm dollar negative.
Okay.
Hope it gave people an edge on fading news. So that's one way to trade news, is that you could fade it.
Hmm. Yeah. When I have a last question for you both. It could be September, it could be October or December. There is some speculation that the Fed will hike rates in September. What is your take on that? When the Fed will hike rates, and what will be the impact in forex?
Well, I have bet you already that it will be actually in September.
I
So,
want in on that. I want in on that bet.
okay, you're
All
in.
right.
I'm not.
No,
I am more. I am more
I
about.
want to bet. I bet what you're thinking, Val.
Okay,
Let's clean Mauricio out and end up with a couple of Cokes here.
yeah. My take is that the Fed will act seriously in September. Yeah, uh, it's an indicator, I guess. But the only thing that can change that if we have really tepid, poor payroll readings over the upcoming month, and I mean the next week figure and the one released by early September. If we have good numbers there, the Fed will move in September. And the market impact, I do expect it to be huge. I do expect a strong dollar rally afterwards.
Okay. Okay, guys. Thank you very much for this live coverage, for coming with us, and for all of our members to type your question. This is really good gathering of intelligence. And then I will want you to invite people to the LAR. I will type the link here in the chat. And go ahead. It's your
Okay,
time.
everybody, come chill in LAR and put on your seatbelts. See you in a little bit.
Okay,
Thank you,
guys.
Mauricio. Always fun, Val. Always fun working with you guys.
Yeah,
The best way to start a day is, we have some laughter and smiles going on, even though I'm a gambler. So it's always fun working with both of you.
same here.
Okay,
Pleasure
guys.
to
Thank you.
do
There is.
that. See
Sorry.
you.
Go ahead. Go ahead, Val.
Just saying bye and see you later. Okay?
Okay. Thank you all. And Dale, there is a question about the Aussie dollar, but I will let you answer that in the LAR.
Okay.
Bye bye.
Okay.
Bye
Bye
bye.
bye, guys. Thank you
See
very
you
much
guys.
for everything, and see you soon.
All right, buddy.
Okay. Bye bye.